Hi guys, welcome to my channel, Traders Motivation. And today's video I'm going to go through why it's very important to manage your risk when trading, when investing, when making any sort of decision to invest money to then get some sort of return. Okay, so the examples on the screen are quite extreme in my opinion, but it should give you an indication as to why you need to protect your balance and only risk small amounts of your capital at a time. So the example on the screen there, opening balance of £1,000. So you've decided to open up a trading account, investment account, whatever, and you lose 20% of that straight away or over time. So then you're left with 800 quid or £800. If you wanted to return to the £1,000, which is your initial investment, you would need to make £200, which would then take your 800 back to 1,000, which is 25% of £800. So as you can see there, the maths doesn't really line up in your favour. If you were to lose 20%, you then need to make 25% in order to get back to your original balance. Now, it's a massive trap that beginning traders fall into, in my opinion, where they over-risk, they over-leverage their account, they place too much risks on trades, if they're risking 10% of their account on one trade, etc., etc. You need to have in the back of your mind that whatever percentage you lose, you're always going to need to make a higher percentage back in order to get to your original balance. And I can't overstate why you need to look after your capital, because it can lead to all sorts of psychological issues. I mean, trading's difficult in itself, but to feel like you need to revenge trade, to feel like you need to put more risk on, which is going to only lead to your downfall. So protect your capital, risk whatever percentage you're comfortable with, but always know that whatever percentage you lose, in order to make that money back, you need to make a higher percentage, which for me, you want to keep that as at a minimum. If you lose 1%, 0.5%, 2%, it's easier to get that back than it is to lose 20%, 10%, okay? So the even more extreme example at the bottom there. So if you lost 50% of your £1,000 opening balance, you're left with £500. In order to return to £1,000, you need to make 100%. And even the most skillful traders in the world who've practiced this art for years and years, it'd take them a long time without being ridiculous in their risk taking to get that back to £1,000. It's possible, but it would take you a hell of a long time, and you would be over risking your capital anyway to get that back. So what it's all about, in my opinion, is to get small gains over time, not risking ridiculous amounts of your capital. The issue with trading is that the gains can be ridiculous, but the losses can be also. So don't see what you can make on a trade. See what you're willing to lose and place your trades accordingly. And to finalise, protect your capital, because without the capital, you can't make any money anyway. So I hope you take something from this. I certainly did, and I learnt this a long time ago. Only risk what you feel comfortable with, and know that whatever percentage you lose, you've always got to make a higher percentage back to get back to your original balance. So, best of luck, guys. I hope this has been of value to you. If you've enjoyed it, or it's helped you in any way, or it's triggered something in your mind that you're going to take forward and help with your trading, please let me know in the comments. Please like, share, and subscribe. I will have further videos coming where I'll go into a few more trading strategies and a few psychological exercises that you can do or try and keep in the back of your mind when you're trading to help us along and all become profitable. So thanks for watching, and catch you soon.